What's OPEC to do about slumping oil prices? It's a critical month for the OPEC Plus alliance with a host of key world events that could shape its production strategy and global oil markets for the following year. OPEC and its Russia-led partners, who together control about 40% of global oil supply, have been cutting a lot of production to shore up the oil market. And the plan is now to start unwinding those cuts gradually in December, but they might delay it if they feel that market conditions are not right. The way that Middle East national oil companies work, they need to allocate barrels to their term customers a month in advance. So if they're going to start unwinding these cuts in December, we could get the first indications of that happening in the first week of November, not too far out from now, after these NOCs announce their OSPs, their official selling prices, and then allocate their term volumes. Now, what could change their plans and make OPEC Plus keep these production cuts in place for longer? Well, slowing demand growth, stubborn inflation around the world, and rising output from rival producers such as the U.S. have been undermining OPEC Plus efforts to put a floor under oil prices. Platts Dubai, the key Middle East oil benchmark, was assessed at $73.55 on October 25th, which is down from more than $90 a barrel in April and below where many OPEC Plus producers need prices to be to finance their spending. But for some countries, all this sacrificing of market share may be too much. They're eager to start lifting their production quotas, get their idled wells back working again, and sell more crude into the market. Of course, more supply likely means lower prices, and competition is fierce in the oil market. So OPEC and its allies have a tough task on their hands, how to keep everybody in the group happy with both prices and market share. So look to the first week of November for those decisions on term volumes. That will be our first indication of whether these production cuts are being lifted. The plan is for about 190,000 barrels per day of increases each month. Of course, the first week of November is also the U.S. election, the 5th of November to be exact. Now, whether Kamala Harris or Donald Trump win the White House isn't likely any kind of immediate threat or boon to OPEC or OPEC Plus, but it's still an election that they're closely watching along with the rest of the world. From the OPEC Plus perspective, it's sanctions policy that is likely to be the biggest issue to come out of the U.S. presidential race. Russia, Iran, and Venezuela are all subject to heavy Western sanctions impacting their oil production. Crude oil output in Iran and Venezuela has fallen significantly from U.S. sanctions, although in the past couple of years it's recovered quite a bit, as the sense of the market is that the U.S. is turning a bit of a blind eye to sanctions enforcement to prevent a supply squeeze in the wake of Russia's invasion of Ukraine, which has redrawn crude flows globally. Iran and Venezuela produced a combined 4.15 million barrels per day of crude in September, according to the Platts OPEC Plus survey by Commodity Insights. That's up from 3.2 million barrels per day in February 2022 when Russia invaded Ukraine. Now, given the escalation of hostilities in the Middle East, it's unlikely either a President Trump or a President Harris would loosen sanctions on Iran. With Venezuela, well, we've already seen some detente there. U.S. companies have been allowed to cautiously re-engage with their operations there. Russia, though, they're subject to the G7 price cap along with other Western sanctions. And would a Trump administration be potentially friendlier towards Russian President Vladimir Putin and loosen sanctions? Would U.S. military assistance to Ukraine fall off and tilt the battlefield in favor of Russia? These would all have some real impacts on crude flows, with Russia at the moment having to redirect its oil towards Asia, including buyers like China and India who have been eagerly lapping up these barrels, providing competition, interestingly enough, for Middle East barrels. It's an interesting dynamic there within OPEC+. Now, the U.S. has had a lingering distrust of OPEC stemming from the oil embargoes of the 1970s, and we've seen various NOPEC legislation introduced in the past. More recently, the Biden administration and Democrats in Congress have gone after U.S. shale companies for allegations of colluding with OPEC Plus during the depths of the pandemic, when a lot of production was withheld to rescue crashing prices. Remember when WTI went negative? So that is the U.S. OPEC Plus dynamic that bears watching with the election. And then after the U.S. election, starting from November 11th, we've got COP29 being hosted by OPEC Plus member Azerbaijan. I believe this will be the first time that OPEC will have a pavilion at a COP meeting, and it comes a year after core OPEC member, the UAE, hosted COP28 in Dubai. So expect to hear OPEC's voice quite prominently in the COP29 discussions. And I think it's no surprise that the organization will have a full-throated defense of oil and its role in the future energy mix. OPEC's most recent long-term oil forecast sees no global oil demand peak on the horizon. In fact, they say the world will need more than 120 million barrels per day of crude by 2050, which is up from a little over 100 million barrels per day right now. And OPEC nations will be counted on to fill that supply gap by and large. That stands in stark contrast with other analysts like the IEA, the International Energy Agency, who have stuck to their forecast that global oil demand will peak before the end of this decade. As electrification, transportation, and a shift to renewables gathers momentum, and that's driven by policy, they say. Policy that OPEC says that the IEA has, well, politicized. So there's going to be more of this robust debate, I'm sure, at COP29, as environmental activists look to get a more aggressive consensus, global consensus, on pushing off of fossil fuels. So as I said, a very eventful few weeks coming up for the OPEC Plus alliance, with implications for both short-term and long-term output strategy. And stay tuned for more of our coverage. I'm Herman Wang with S&P Global Commodity Insights.